Hello, and welcome to Everything Wealth. In this video, we will break down what money market funds are, how they work, and their benefits. Additionally, we will share financial advice from the renowned financial expert, Suze Orman, on how to invest in money market funds. What are money market funds? Money market funds are a type of mutual fund that invests in short-term, low-risk securities such as treasury bills, certificates of deposit, and commercial paper. These funds aim to maintain a stable net asset value (NAV) of $1 per share and provide investors with a reliable source of income. How do money market funds work? Money market funds pool together money from a large number of investors and invest in short-term debt securities with a maturity of less than 13 months. These securities are typically issued by governments, corporations, and financial institutions. The primary objective of a money market fund is to preserve capital and provide liquidity. This means that the fund seeks to minimize the risk of loss and maintain a stable NAV while providing investors with easy access to their money. Benefits of money market funds. There are several benefits to investing in money market funds, including low risk. Money market funds invest in low-risk securities, making them an ideal investment for those who want to preserve capital and minimize risk. Stable NAV. Money market funds aim to maintain a stable NAV of $1 per share, which means that the value of your investment is unlikely to fluctuate. Liquidity. Money market funds offer easy access to your money, with most funds allowing you to withdraw your investment at any time. Competitive returns. While money market funds may not offer the highest returns, they generally provide better returns than traditional savings accounts. Financial advice from Suze Orman on money market funds. Look for funds with a strong credit rating. Suze Orman recommends investing in money market funds with a strong credit rating. This means that the fund invests in securities issued by reputable institutions with a history of financial stability. Diversify your investments. Suze Orman advises investors to diversify their investments, including money market funds. This means investing in multiple funds and other asset classes to spread out your risk. Understand the fees. Suze Orman emphasizes the importance of understanding the fees associated with money market funds. Some funds charge higher fees than others, which can eat into your returns over time. Consider tax implications. Suze Orman recommends considering the tax implications of investing in money market funds. Depending on your tax bracket and the fund's distribution, you may be subject to taxes on your investment. In summary, money market funds are a great investment option for those who want to preserve capital, minimize risk, and earn competitive returns. By investing in short-term, low-risk securities, money market funds aim to maintain a stable NAV of $1 per share while providing investors with easy access to their money. To maximize the benefits of investing in money market funds, it's essential to follow Suze Orman's financial advice, and invest in funds with a strong credit rating, diversify your investments, understand the fees, and consider tax implications. Thank you for watching, and we hope you found this video helpful. If you have any other tips or suggestions, please share them in the comments below. Thank you for watching. Like, share and subscribe. We hope to see you in the next video.